Alrighty, so essentially I want to go over my trading strategy and how I trade Euro USD. Essentially what I'm looking for is a New York continuation. So what is New York session? New York session is around 8 to 5 p.m., but most of the volatility is going to be between 7 to 10. And again, volatility is how much the market is really moving, how aggressive it's kind of moving. Um, and from 7 to 10, I'm looking for what the London session did, right? So if the London session from 2 to 5, which is when it primarily moves, is bearish, um, if the London session is bearish, I'm looking for the New York session to be bearish. If the New York session, or sorry, the London session is bullish, I'm looking for the New York session to be bullish. So there's a great example here on Wednesday. I'm going to label out the levels, right? So I won't take too much of your time. I'll try to do this quick because it's pretty simple in my opinion, right? So essentially London, the levels that I use, not London, Asian, the levels that I use is from 7 o'clock to 12 o'clock at night, right? So 7 o'clock is going to be 1900 here. I'm going to use this low and I make it green and I make it a solid line, right? And then I use midnight, the highest point at midnight. And that's the other level I use, right? And then I do the open of the day. The open of the day is going to be midnight. Midnight EST, Eastern Standard Time, right? Go here, and I like to make it a dotted line, and I like to make it blue. So essentially these levels kind of work as support and resistance, right? But essentially what you need to understand is that generally I like to see around the 2 a.m. a manipulation move, right? So it opens. Obviously, the market's going to open for the day around midnight. So if it's a down day, what I like to see is for price to come up before coming down. It tricks people into thinking the market's going to go up to then shoot the market the other way. And once you see the market shooting the other way, right, and you see that two, between 2 and 5 a.m. is bearish, that's where I'm looking for a sell. And then in that case, I'm looking for it to come into essentially a Fibonacci retracement between the 62 and the 79. That's what I'm looking for. Or I'm looking for it to essentially break and retest these Asian session levels. And a break and retest is this is a level of support. It breaks through to then touch it and bounce off. And if we look here, this low, if you look up here, this low is basically 1.1605, we'll say, right? 1.1605. I do a 10 pip stop loss, which is as low as I go for in the Forex market, that is. And you easily have a 1 to 2 here. Now, I would have gotten close here at 10 a.m. Well, actually, matter of fact, because this is a trade I'd missed. You could have gotten in, and if you just went for a 1 to 2, you wouldn't even had the wick because it would have broke. You would have got in. It would have came up to, let's say, 12, right? But let's say you got in at 5 here. I feel like that's pretty fair to get in at the whole number. And it came up to, at least here, it came up to essentially 12, 1.1612, and your stop loss would have been 1.1615. So on pretty much every broker, you should have survived. And then you could have got a 1 to 2. And if you would have been able to stay in this example, if you stayed in the whole week, this is where you actually would have had a crazy return, right? So I didn't catch this. I wish I did, but it's something to study for, right? So if the first example was a little rough, right, I'm going to do it again with another example, right? I mean, that one is the best trade of the week. I wish I had gotten that. But, you know, sometimes you miss trades. Now, this one's a little more janky. But we'll go ahead and do this one over here, right? So, again, let me label out Asian levels from 7 o'clock to midnight. Midnight low, make that green. Make it a regular line. Midnight high, or between 7 o'clock and 12, the high, which is right here. And then I want to label the midnight open, which is over here. Make that dotted line. So essentially, like I said before, the market likes to manipulate you to the downside on days like this. It opened, and it didn't manipulate you for a long time, but it opened up here on this candle right here. It came to the downside before coming up, right, for the rest of the day for the most part. So if we go on the hour, we use the Fibonacci tool right here from low to the high point, and generally I'm going to get in between 7 and 11 o'clock. I think I was able to get in on this candle right here, so I got in a little early around 6, and I had gotten in generally when I kind of work off of these levels. I would have gotten in here at around 2 pips above, so it's kind of like at 29, so I probably would have gotten in at 31. I mean, I did get in this trade, but I don't remember my exact numbers. Set a stop loss at the daily low, which is like 1.1607. And you have a 1-to-1 here, right? Now, you could have, the name of the game, it's kind of figuring out what stop loss you're actually comfortable with actually having. And obviously, you want to have your stop loss, if you can, as small as possible. And obviously, you want to have the reward as big as possible, right? I was pretty certain it was going to take out this high, but I was comfortable with the 1-to-1. I was kind of chilling on the day. And obviously, in terms of the stop loss, you could have had something like this, and then you could have had something like this, right? Now, admittedly, let me not cherry pick, right? I mean, this is a trade I actually took. But if I wanted to just go off the Asian levels, right? You just want to go off the Asian levels, I don't believe you would have made it with a 10 pip stop loss. In this case, you would have gotten taken out, to be frank, right? You would have went in with a 10 pip stop loss, you would have gotten taken out, right? But then, let's say you got taken out in this trade, and you re-entered into the trade I just showed you, and you had a smaller stop loss, you actually would have got a 2.5. So you would have lost, let's say you put up $100, you would have lost $100 to then in this one make essentially $248. So that's why you essentially need to manage risk, and you need to have, good risk to reward, right? If you risk $100, you don't want to always just make $100. Sometimes it's fine to just risk $100 to make $100, but sometimes you want to risk $100 to make 200, 300, 400. So that's essentially my strategy. I use the Asian levels, like I said, from 7 to midnight, and I use the midnight open as well. It's kind of a area of support resistance as well. The farther it goes away from this level, like if it goes past this level to the upside, it's probably going to be up day. If it goes past this level to the downside, like over here, right? Like over here, it opened here. The farther it goes away from this to the downside, you probably want to assume it's a down day, right? And just looking at it from this high to this low, I feel like that's definitely, yeah, it crosses the 50. Thought it makes it a 618, but it crossed the 50. But yeah, so essentially I trade New York continuation. So if London is up, I expect New York to be up, and if London is down, I expect New York to be down. Or if London is down and I think New York is going up, I'm not trading that. I don't trade reversal days. So one more time, from 7 to 12, I'm labeling the highs and lows, and I'm labeling the New York open. And if London is bullish, I'm looking for a buy, and if London is bearish, I'm looking for a sell. That's all.